So thanks everyone again for the packed room, for joining us on this panel on emerging markets. We've got an amazing set of panelists. Let me start by just setting the sort of the backdrop and what's happening to emerging markets. So it's a challenging time for emerging markets these days. If you're a developing economy that's reliant on foreign capital to fund your consumption, to fund your investment, interest rates are rising across the world, and that's shifting capital to advanced economies. If you're not that and you're capital sufficient, but you're reliant on exports, then the global economy, the major economies, Europe, the US, and China are slowing. So you're hit on the export side. You have the war in Ukraine is raising commodity prices, politically sensitive items like food, like energy, and that is adding to the social stress and the political stress in emerging markets. And last but not least, you also have, sovereign default issues. So you have Sri Lanka has defaulted, there's potentially default in Russia, and people are talking about who could be next. So these are the challenges, and we're going to talk about them. But also, it's also important not to ignore the developments that happened over the last 2 decades. So in the year 2000s, emerging markets accounted for only 20% of the global economy. Today, it's more than double that ratio or that share, and that's expected to continue. Emerging markets are still expected to be the main driver of global growth. They have favorable demographics, and they have plenty of catch-up to do in terms of technology adoption. So there's still room for growth in emerging markets. So we're going to talk about the challenges. We're going to talk about the opportunities. We try to end on a positive note at the end. And we have a great panel to discuss all these issues. So let me start with the challenges, and let me start with Martha Osier, who is a partner at Adenia Partners. Martha, high food prices, high inflation, high interest rates, slow global growth. Is this the worst environment you have seen in emerging markets lately?
Thank you for that question. Good afternoon, everyone. I'm Martha Osier, partner at Adenia. We are a private equity fund focused on controlled growth investments in Africa, and I lead the Nairobi office. Ziad, yes, I think you hit the nail right. This is one of the most challenging times we are facing. I would say for majority of emerging markets, at least we see this across many African countries. The biggest effect so far has been the depreciation of the currency. And in Kenya, for instance, we usually would project in our models, say a 3% annual depreciation of the Kenya shilling against the dollar. Now we are seeing almost a 10% depreciation in the past 12 months. This is unprecedented if you look at what has been the track record of the shilling and many of the other currencies that we deal with over the past few years. So what does this mean? Obviously, imports have become more expensive. This is putting stress on government budgets. It's also putting stress on consumers. And I think at this point, it's hard to say how much can consumers take and how much will governments be able to add onto the debt levels for the different countries. So aside from inflation, what we see consumers doing, say in some of the businesses we have invested, is they start to change their purchasing behaviors. So I don't think this is unique to Africa. I'm sure this is happening, if you look at inflation in Europe, in the US, this is the necessary, course of action. So I would say everyone is going to tighten their belts. On the production or the input side, yes, costs have risen. But I would say for some of our exports, the benefit we do have now is that the exports for the importing countries are slightly cheaper. So I think that's one positive, and partially it's offset by the rising input costs. So yes, challenging time, and hopefully it doesn't get worse than where we are today. Thank you.
Thank you, Martha. So let me turn to Ali Rashid Mohannadi, who is Executive General Manager and Chief Operating Officer at QNB Group. Ali, do you share Martha's assessment that, unparalleled challenges for emerging markets? Do you share that view as well?
Yes, I do. There is, we'll say maybe 60% has been covered. There is a lot of things we need to look at it from the emerging markets. You need to differentiate between export country and import countries. The import country, which is impacted heavily on this. Now, if you're looking to the inflation examples, which is Europe reached 8%, which is from 80s that happens. It's not just because of the war or the oil and gas. It is about started from the pandemics. If we look into all the pillars around what's going on today, there is a slowness in the interest rate, which is the government's and central bank responsibility. Not only from emerging markets, they are watching what's going on in the markets. And they need to react and to prevent what's going on in inflation because the gap is huge. So they need to react quickly and quickly and quickly in this. The second thing, and what I believe and what QNB believe, the inflation's part of two things. One of them, oil and gas and food industry, and the whole commodity programs. You will find that some countries, so we'll say it's GCC, Qatar, Brazil, they're benefiting from this. And other country is suffering, as examples, some African country, not all of them. And you will find some Asian countries are the same. This will give another problems. I think we need to look at it from government area, which is the impact in the liquidity. Because if you do the interest rates, the liquidity will be impacted, all inflation will be increased. So it is difficult to say one item we can fix, the other item cannot be fixed. And this is my opinion in this.
Sounds good. Thank you, Ali. So, Paulo. Paulo Gomez is chairman of Orango Investment Corporation. Paulo, Ali said we should differentiate between commodity exporters and commodity importers. The African continent has both. Some are being hit by high commodity prices. Some are getting some windfall from high commodity prices. But also in Africa, 20 years ago, with the optimism in emerging markets, there was the Millennium Development Goals. There was a whole optimism about the rise of Africa. How's that going, and how's that being challenged by the current macro environment globally?
Yeah, thank you. So Orango is an investment vehicle. So we have been essentially a market maker. We package transactions. We go to greenfield rather than brownfield, because in a continent like Africa, you essentially need to be a market maker. You underline the issue of optimism. We have been hit. I mean, the case is Africa is like when you have plane take off in an airport. The most critical time is the takeoff. And this is exactly what happened to our continent. Many of our countries were growing quite well. 6-7%, countries such as Rwanda, Ghana, and others, and then the crisis, and then with the COVID. But the good news is that I think the African mindset now has been more in managing crisis. This is not the first and certainly not the last one. So the key now for policymakers is how do you learn and inject that DNA in your administration and with the public sector and private sector about how you manage crisis. So we are now in that mood. But unfortunately, and I think we'll touch on it on other issues and other questions, is that there's been a move in the goalpost. We have done the right thing in terms of our public policies. We have done the right things in terms of making sure that we manage our monetary policies. But then we don't have the tools. If you see the role that has been given to IMF in 1944, was precisely how an institutions that could have the global reserve can be in a position where you have a crisis to inject resources to help countries as emerging countries to face the crisis, because we know that there will be crisis. The key here is that how you get that injection of cash at the moment where you have a crisis in order to manage your countries. And this is not happening. So definitely we will need a reset of the globalization. But I think I will prefer to touch on it when we think about that particular issue later on.
Sounds good. Thank you, Paulo. So we'll touch on globalization, international institutions when we get there. But let me just talk about markets now and ask Ana Lucia Lind, CEO, co-founder of Swiss Financial Engineering. Ana Lucia, we have a lot of pessimism in the market. I'm trying to look at you while being close to the mic. So emerging market currencies are down, yields are up, equities are down. Is this pessimism justified, or do you think there is an overreaction?
Good afternoon, and thank you all for having me here. I will always say be attentive. As a Caribbean, Colombian, German, my accent is totally different than everyone here. So take the message and forget my accent. The message is there. Allow me just shortly to say congratulations to our new elected president. I'm from an emerging market country, Colombia, which Isam knows, and I'm a German as well. So coming from the two parts, I could say there is not an overreaction. And if we see our new election, and we send congratulations from both sides to Gustavo Petro and Francia, we know that the emerging market is a tail of elephants. And no matter what the mammoth is an emerging market country, the impact of negative reactions in industrialized country hit us. And to steer the emerging market out of difficulties that come with implications from developing countries, it's so difficult. We will need to have so many incentives in the market. And I have never recognized in more than 100 countries of this world that I have traveled, an emerging market government that could say, I have a settled policy ready and prepared for this moment. If we think in this crisis, Africa is still selling gold at discount, selling copper at discount, giving away the lithiums. How come we aren't going to be suffering? We're going to even have more stress. America doesn't have milk for the baby, and that's a crisis throughout the world. But Africa has everything and has absolutely nothing. Then we have interest rate hiking. We have a war in Europe that are interested to bring another one into the European Union with weight upon us. But nobody's taking the reality of the economy where we need to feed the people. We see everybody running to Europe and we say, no, stay in your corner. And what is emerging market when sometimes, God forbidden, we say third world country? There is no third world country. There is one world. But our basis has been all of the time to differentiate humanities and our jurisdiction. And this stress is totally justified. And this is the moment to create policies. It's the moment for the bigger ones to unite with the smaller ones. At the moment to share the formula. Every formula we want to have to take off stress in the economy are there. It's just hand being suitable and shareable. And we cite as the pandemic started, we have a vaccine in a year. In a year, we had a vaccine in the market. There was money. For the emerging market, there's nothing. So when results catch us and we get confused because the stress of interest rate, the deficit in fooding, the hardness in transportation and logistics, then we all stand aside and say, God forbid they come to my direction. The proof of faith is on this table, and we all are part of the solution. No matter what your name and no matter what your religion, we are all on this. And if we don't take a reaction today, tomorrow, the penalty is our bid, is our ticket.
That's very interesting. Thank you, Ana Lucia. So, whenever we talk about emerging markets crisis, there's one country is always at the frontier of it, two usually, but one of them is Turkey. So the Turkish lira lost about 90% of its value against the dollar since 2012. Almost every year it's one of the worst performing currencies. It is this year, with the exception maybe of the currency of Sri Lanka's. And I want to ask Hakan Akbaş, actually, the founding partner of Strategic Advisory Services in Albright Stonebridge Group. Is this going to continue? Should we still be short Turkey all the time, or is this going to turn around?
Why do I always end up getting the best and easiest question? I don't know. I'm the managing partner of Strategic Advisory Services. We are a geopolitical, regulatory and risk advisory. And we have global partners too. So obviously Turkey is our main focus. And I am an eternal optimist who worries a lot. And given where the emerging markets are today, definitely there is so many things to be worried about. Even before coming into the hawkish policies of the central banks, I mean, we have a war in the middle of Europe that nobody had anticipated before. Because a year ago, if we had had this conversation, people would be telling us about Russia being the next frontier market and all the talent. Look where we are right now. So things are very dynamic. And this is on top of like a once-in-a-lifetime pandemic that hit the supply chains, the food supplies. So on top of it, now we are into the third phase of this global monetary experiment. Going back to the 2008, we've had this financial crisis, and we've tried twice already to get out of it. Even today, for example, Fed is trying to figure out how to get ahead of the markets. And the 75 basis points hike is historic in the standards of the US. But are we going to be able, and always it's the US that leads the countries out of the crises. So there is a lot that we need to see going forward. But obviously, monetary tightening is going to create a flight to quality. That's inevitable. And that is going to have an impact on the emerging markets. And also part of it is going back to what Ali Rashid was saying about the importers versus exporters, right? The commodity prices, the energy prices, that is taking a toll on countries like Turkey where they need to import energy. So it will, without any doubt, lead to volatility in the local currencies. You call it devaluation, but I tend to look at it as some of these export industries becoming more competitive. So, it depends on how you look at it. And then increasing the burden of, debt burden of these emerging countries. But still, again, the problem lies with the advanced economies. I mean, out of this cheap supply era, we've created this $300 trillion debt problem. And 2/3 of it is with the advanced economies, and 1/3 is with the emerging markets. So they've spent the money and they've created this, so they need to lead us out of this mess.
Thank you, Hakan. Well, obviously, if you're rising interest rates, being a commodity importer is a bad thing. But if you don't respond by raising interest rates yourself, and you stand out about the only, one of the few central banks around the world that doesn't raise interest rates, is also an issue. Let me move on to Assam. Assam, obviously, I'm regional director for the GCC at the World Bank. And Assam, one of the things that people talk about now and was, highlighted at the end of last year, and the war in Ukraine is exacerbating it, is food prices. Food prices are reaching historic highs. Last time they reached these highs were a decade ago in this region. They might have contributed to, popular unrest, the Arab Spring. Are you concerned about rising food prices and the social and the political impact of that?
Thank you, and thank you, Ziad, for moderating this. Look, let me start by saying that, working at the World Bank, you have to be optimist. If you're not optimist, you cannot basically work. You're on the right side. Work in the World Bank. So, I mean, look, the food prices definitely, but I think what you're hearing around the table is a convergence of several crises hitting, I would say, the world at the same time. So we're still in the pandemic. I just want to remind everyone we didn't get out of it. So yes, here in the GCC, we are lucky. I mean, we have a high level of vaccination, and the non-oil also sectors are moving well, but the pandemic is still there. There is an issue of supply chain. There's an issue on the war and what it means. There's a commodity. It's beyond basically the food. It's every commodity that you have on the chart. You can see it in Bloomberg's charts. I mean, they're all basically up and up in prices. And when it comes basically to the food, definitely it's a big issue. But it's a big issue beyond just feeding the people. It's creating actually a huge fiscal problem for a lot of the countries. Because if you go just around the MENA region and in some of the Africa region, you have a lot of subsidies related to food, but also some of the commodities. So what Hakan and the rest are saying about increasing the interest rate in a time where the fiscal situation is worsening for some of the countries, it means basically you have another crisis that might hit us soon, that we are not ready for it. And when it comes to the emerging market, I think we have to differentiate between two types of emerging market. Those that have really consolidated their fiscal situation over the last few years, and those that did not. And the other part, those who have actually opened their market for business, for local and foreign direct investment, and made it much easier basically for business to start and flourish, can actually take advantage of the crisis and be able basically to probably weather the crisis much better than those who still have like huge amount of subsidies, they haven't consolidated, and they need to refinance their debt very soon. So I would not put all emerging market in the same basket. I think some of the emerging market will be able to take advantage of a situation where others might actually have to face another crisis on top of what I have said, which you mentioned at the beginning, which is the debt hangout that can come to bite a lot of those emerging markets that have bigger fiscal deficit now because of all the subsidy I just mentioned. But in addition to that, refinancing their debt is becoming more and more expensive, which you see a little bit where they put themselves in a hole.
Thank you, Hassan. And we're going to get to the end. We're going to name, but not shame anyone. We're going to name some countries where we think there are bright spots, the ones that have opened up, the ones that have consolidated their fiscal balances, and they could benefit from the currents. But before getting there, let's just talk about one tool through which emerging markets managed to, grow in the last few decades is through exports. So, a lot of countries exported their way to prosperity. They benefited from the opening up of the global economy, more trades and goods and services, and that's how they grew economy and they moved up the income ladder. So I want to move to Sheikh Mohammed Al-Thani, who is Deputy CEO and Chief Strategy Officer at Qatar Free Zones Authority. That's naturally an institution that benefits from movement of capital, trade and investments. What's your view on globalization? A lot of people are pessimistic. We had a panel this morning. A lot of people are pessimistic. Some seeing it permanently reversing, others seeing it in transition. What is your view? Is globalization in reverse? And if yes, can emerging markets do something to benefit from this reversal of globalization? And if not, then obviously it's great.
Well, thank you, Ziad. And it's a pleasure taking part in the second Qatar Economic Forum. Also very happy to see such thought leadership events take place in an in-person format rather than virtual. I mean, as Issam just said, we're still in the midst of a pandemic. And I believe, honestly, as the world reopens, we have an opportunity to rewrite old scripts and embrace new ideas, but also really to shape the future of the global economy. I mean, to answer your question in relation to globalization and if it's in reverse, I don't believe globalization is in retreat or reverse. Even though the frontiers may have changed, we may be talking about geopolitical tensions, but we can see how the world really has come together around the pandemic and around the climate change debate. I think there's a push now towards a greener globalization, more sustainable globalization, resiliency within the supply chain disruptions, and really sharpening of the global governance, if you will. I'm a genuine believer that countries and companies really do need each other. Having said that, I think Qatar is in the position to take a leading role in these conversations, given its geographical location at the crossroads between East and West and Africa, along with the exciting projects that are happening on the ground, including the World Cup. Qatar really is built around collaboration and connectivity. More specifically, around the free zones, we're really building an ecosystem in the free zones for companies to thrive. I'm sure some of you are aware we operate 2 free zones at Qatar Free Zones Authority. One, which is the airport free zone that takes advantage of Hamad International Airport with over 200 destinations. And the seaport free zone, which takes advantage of Hamad Port, which is the largest greenfield port in the world with over 40 global ports connected. And really, Qatar sits within a pretty amazing ring with, 60% of the world's population within an 8-hour flight. This really presents, an opportunity in both mature markets, but also emerging markets. So just to conclude, Ziad, I think, free zones are a great engine for globalization. So I honestly believe with the right ingredients, I think they can become hotbeds for innovation and growth.
Thank you, Sheikh Mohammed. I thought this side is where we have the optimists and this side we have the pessimists. So maybe we should switch around. But Ana Lucia, you sit in the middle. So what is your view on globalization? Are you an optimist on globalization or a pessimist?
I am very positive because there's nothing in this world that we could do on our own. And globalization means we are united. And I remember when I was a student, we had the hot topic if globalization is a one-time effect or is a continuity. And I have to say, if we didn't have globalization, probably today we will not transfer ourselves to the ocean as we does it so fast. Unfortunately, it had been used by many other countries in a preference way. China have a population of unofficially 1.3 billion versus another country who may have technology and industry does not have the same capacity to produce that wide band. So if we talk on a balance what globalization is, we have to structure the focus. Is it a benefit of taking production from one country that can use the source of human power at a lower cost to transfer technology, know-how, and products? Or it is a nation that embrace the industrialization to take revenue in terms of the high technology they have? We have in parity most of the time in this situation. And if we could take the nug together, we take China produce, it pass through Panama Canal, then you have America, the biggest consumption out of China. Where do you leave the other emerging market country in the globalizations? They are just a small little mosquito in the middle of all of this. I am very positive that globalization is needed, but it has to have a weight. At the moment, we are totally unbalanced. This might be my point of view. I love to travel the world for my work, and I have to say, when I am in China, I ask myself, how can my country ever compare with China? It is impossible. They need us, we need them. We need to buy at a lower price, they need to produce in mass. Germany is different. Germany take China, use few of its products, but it's still a know-how at that side of the ocean. So I do think if we take globalization as the essential of growth, it's fantastic for us. It's bring the knowledge, it's bring the technology, and it's create platform to take benefit like a port as Qatar free zones and the many free zones in the world. Like, for example, if you ask about Timor-Leste, it's a great free zone. Nobody knows it, you know, but it's doing great. It's just the factor is not being recognized because they are somewhere tail of somebody. And I do think we should use the word globalization in a more formal debate because it was there back in the 90s. In the 2000s, it was great benefit. And then at the moment, it went diluted because it's being used on the basis of those countries that have the advantage to take out capital or asset out of the smaller country. I would love to see globalization on a platform of government incentivizing, giving incentive to emerging market country to let them understand if they join that channel, they will be benefit as emerging market to grow higher and become probably a candidate to come out of an emerging market to become a developed market. And another example of this globalization for us in South America, I'm sure some knows it, is Chile. You know, it's such a developed South American market country, but globalization grow the country was shining and just after the moment it's diluted. And it's very sad because you have to go back again from zero, create new policies, create new system, and time will never be the same when it's have gone. So I think at the moment we have spent a lot to be in the globalization, but we have not been sustainable in the different region. At the moment, I think it has benefited highly Asia. It has benefited part of Europe and America. But the rest of the nation, I don't know, probably is my perception. But traveling, I haven't seen the great benefit that the rest of the world have taken. And I think your question is very fair for us to say, let us unite together in globalization and use the positive energy out of this to develop the world economy and try for the smaller countries to have a positive effect. Like, for example, National Bank of Qatar, that we could take those countries and benefit them with know-how and financing knowledge to give them a sort of platform to go forward if government in those countries are not the first giving them the access or the entire geopolitical situation that we locally as in the financial side could be a help to that tools.
Thank you, Alicia. So Martha, I'd like to hear a view on globalization, but also, one piece of evidence that people cite whenever they talk about deglobalization, so the retreat of globalization, is this US-China competition. It sounds like a long time ago because we had COVID and then we're talking about stagflation now. But in 2018-19, we're talking about US-China trade war. How do you see this US-China competition impacting Africa? And what is your view on globalization in general?
No, I think generally speaking, yes, it's true. Like Anna said, there are probably large parts, I would say, of Africa where you don't necessarily see the benefits of globalization. And this is primarily because a lot of the African countries are still exporting raw materials. So whether these are commodities or these are not finished products or manufactured products. And if we look at the countries that really got the benefit, it was from exporting high-value products. So I think there's still a gap there. And certainly there are countries that are taking steps to make sure that they can export, more finished products to get better value in the global trade. So I think there's hope there. In terms of US-China, definitely, I would say yes. China has become quite an actor in recent years, investing heavily in Africa, particularly in infrastructure. So today, from our standpoint, I would say, as people who are on the ground, there's definitely it's a positive because you see the infrastructure growth, you see the development. I think where we have challenges sometimes is maybe when it comes to matters of human rights. But these are all things that I think will be addressed with time. The US is still very strong on the continent, especially when it comes to matters security. And more, let's say, developed, machineries, healthcare. The US is very strong. So I would say today I would characterize it as a healthy competition between the two countries.
Healthy competition. Thanks. Ali, you're at the bank that has a global footprint, so you have a front seat to globalization. What's your view from Doha? How do you see globalization evolving?
Let's start with globalization meaning first.
Okay.
From my side, and from QMB side, we said there is no globalization, no afters. There is a lot of alignments, a lot of contracts, agreements about the globalizations. We see it in papers. And recently, what's happened with Donald Trump and the agreement with China and the agreement with Mexicans and other agreement being dropped, we believe now there is no globalizations. There is 3 players now. One of them, the Americans. The second one with, I will say, China and Asia. And Europe, I will say Middle East and Africa, the players. So there is nothing we call it globalizations today. It's deglobalization, and we need, from emerging markets, we need to align with the players now. Today, if you want to go with China, we have to have the right to go to China. We are not belonging to the American agreement. So we need to be open with the Europeans. And today, what we're looking from a QMB perspective, because the footprint, as you said, we cover them from Europe, UK, China, Africa, Middle East, and all that. We're connecting all these Europeans with Middle East and North Africa, and Middle East from Qatar. I'm just an example because we're from Doha. We're connecting with Korean, Japan, China, India. So we are connecting. But it's not about globalization as a word of globalization. It's not there. Now you need to connect, align with all these countries. Globalization is, you said, we want to do it in Turkey, we'll move it to China, and China will send it to Africa. This is not a globalization. We believe of that.
Okay, so from one global world to more fragmented world with three sort of nodes. Paolo, you mentioned the world is very different today. Some panelists are also saying the world is very different today. Certainly in the 1940s, when the global financial institutions were established, you say they should change, or we should have other institutions. What is your view on that?
Yeah, I think on globalization, I think on the camp of the optimist here, the other side. And I think China, and I was mentioning about China, there's an event where I think a journalist asked Chairman Mao of China, what's your assessment about the French Revolution? And he said, oh, it's too early to say. So is it too early to judge the globalization and its impact? I mentioned the issue of the goalpost. I think we had some couple of rules that we agreed. It was set by the Washington Consensus and multilateral institutions, where you shouldn't do this, you shouldn't do that. And then suddenly we changed the rule. You had a pandemic, and people injected an average of 20% of the GDP in printed money overnight. I think you mentioned that. For many of our countries, we couldn't do that. So if you cannot do that, so you rely on the multilateral institution to get your foreign reserve to cushion the crisis. And then when there was a discussion about allocation of the SDR, the rich countries just refused to reallocate after printing money and injecting so much money, to re-inject those money to the countries that needed it to cushion the crisis. Up to today, the discussion has been, please, those countries that don't need the SDR, so the global reserve for liquidity, to let the countries that need that to use it. Even if it's to build roads and do things that can have a global impact. You mentioned earlier that the emerging market represents something like 60% of the growth. It's a huge talent, pool of talent and consumers. So if you allocate resources to the emerging market in Africa, it will pay off to the global growth. It's just simple arithmetic. So which means that I think we simply don't have the tools and the institution to deal with the world today. We don't. I'm not going to talk about leadership because it will be maybe impolite to make reference to some of the people. But what has happened before the last US election was very, very bizarre as far as global leadership. And we are just paying the price, and we may have to pay the price again. So someone has just decided overnight that he wants to change the rule of globalization. And he say, my country first. And globalization was supposed to be us together. So I'm in the camp of optimists here, but I'm not very optimistic about the result of all of this, because we simply don't have, again, the tools, we don't have the institutions to manage the global world. And it's quite worrisome because the next pandemic is around the corner. It's going to happen. It's an issue of how it's going to be, what the size of it, how deadly it's going to be. But we know it's going to happen. And the vaccine nationalism and all these things will happen again. So I don't have answer to that. The only thing that I'm doing as an African and in advising, we're doing a lot of sovereign advisory. We are helping countries to know how to manage crisis, rather than being in a mood of preventing a crisis that nobody can prevent. But how do you manage the crisis when it happens? Because we know it's going to happen.
So let me follow up on this. You're saying the current global institutions are not enough. Do we need to change the rules within these institutions, or do we need to create new ones? And if yes, what else is needed? We have the IMF, the World Bank, the WTO. What else is needed there?
I We have to create new ones. There is nothing wrong on recognizing that you made a mistake. Some adjustment will be made. I mean, I mentioned earlier about Keynes, and there's a lot of literature about it, where in 1944 he was quite not in a very good health and suggested the bancor, which is a currency that could be a kind of a global one, instead of being dependent to a dollar or a particular currency. Unfortunately, he was sick, and I think he couldn't finish the Bretton Woods discussion. So there's a lot to learn from what a man like him, who actually warned people, because if you remember again, after the First World War, he wrote a book about, I think, the economic consequences of the peace or something, because he warned people that the way we are managing the post-World War and the way we're punishing the German may create a situation for the Second World War. And it has happened. So this was for someone who basically had that global vision. So I think there's a lot to do. So it's a combination of probably in this reset of the globalization, because we know and recognize that we reached the peak of the globalization in 2008, and now we are going to something. So I think it's how do we manage to go from the peak of the globalization to the one we have now that requires a reset.
Thank you, Paulo. So lots of challenges, deglobalization, what recommendations to create new multilateral institutions. Essam, what is your recommendation for policymakers in emerging markets in general to, navigate the current environment that we're in?
Yeah, look, it's a very big question how to navigate what you need to do. I think to navigate you have to look at individual countries, but very important not to lose the sight over the long term. Okay, so where is every country comparative advantage? And within this globalization part, yes, you have a setback, and you don't manage or look at globalization between 1 year and the other. And we have seen this pandemic has shown basically some of the limitation by hoarding of vaccine or equipment and so on. But we see also that the institutionality for managing, for example, the climate risks that's setting slowly on us is not there. So where you have collaboration at some regional level and so on, I think what Paulo is saying about what is needed to go forward from here is something beyond what has been created, because what has been created until now is more on a country level basis. And what we are facing and we have faced, and this pandemic and the climate, especially those two showed, is that you need to have a possibility to manage things at the global level, because it's not one country solution. I mean, if you have a financial crisis in a country, you bring the IMF in, they put basically, okay, this is a program that can get you out of it. This is basically the funding that can get, but that's a country level solution. The global type of crisis and the risks that we are facing today are very different than what these institutions have been created for, even with the evolution of these institutions. So in my opinion, basically, it's very important to look at two things from a country level. Is managing the crisis is one, but how basically to avoid getting into the crisis is where we need basically to do a lot of work. And when we talk about sovereign risk today, most countries basically look at their debt, at their fiscal, at their balance of payment. But no one basically is looking beyond that. The sovereign risk is way beyond those three things and has to deal with where is the water scarcity? What is going to happen basically with my cyclones that are increasing in certain part and my natural disaster part? How I am going basically to be able to manage the risk if it happens of another pandemic that's happening, because we know that if it happens around the corner, we're not ready as a world to do this. How am I going to deal with all the climate risks that are hitting us as a country, and where is all of these funding that is needed for a country from a private sector and public sector to be there? So those type of issues that we're dealing with, including the climate especially, you're talking about tens of trillions of dollars that are needed between now and probably 2050 just on the climate side. That's not taking into consideration any of the other crisis that might hit us, where we're not ready yet for them. So it is a big problem, but it's also an opportunity for countries to look at the risk from a very different perspective and try to be able to minimize those risks. So if some of these risks materialize, they are really ready and not being in a situation where they found themselves in this last pandemic, or they might find themselves because of some of the crises that might hit them.
Thank you, Hassam. So, recommendation is to look beyond the standard macro numbers, think about the environmental concerns, the climate concerns, because they will hit us long term. Hakan, as an optimistic, investor, what do you advise your clients? Obviously the environment is not that bad. What do you advise them to do?
Yes, thank you. I almost would like to separate financial investors from strategic or patient investors, because they have a different profile, and I think they need to be treated differently. So I want to build on what Issam was saying earlier. Just policymakers need to get out of this receipts that they've had for a long time. Like Fed is looking at 2% as the inflation target when they have almost over 8% inflation today. Or just looking at CDS, for example, for a country's risk, just like cherry picking a restaurant with a Michelin star rating. These are like yesterday's numbers. So we need to go into the next level at the sectoral level as opposed to staying at the macro level. So from an financial investor perspective, it really depends upon the risk appetite that they have. And probably on the safer side, if you look at countries like, Poland, for example, right? Safe haven, but even they themselves are having challenges by trying to offer a positive real interest sort of income for investors. And then on the other side, we have Russia. As I said, 150 days ago, if you had looked at Russia's CDS, it was less than 150. And so again, these numbers really don't mean anything in this new world. And having said that, we have countries like South Africa or Turkey in between. And so I know this is your favorite topic, Zaid. So, and I think it's time for countries like Turkey to really look at where the policy rates versus where the inflation is headed, and try to look at how sustainable their current position is. And from that perspective, definitely looking at cherry-picking countries, cherry-picking the ones that would be sustainable, and also probably diving into sectors that will have their revenues and income from foreign exchange industries, export-driven industries, and hopefully their costs being in the local currency. So I think that will be a good way to hedge your best. But for the strategic investors, so these are like the multinational companies, they are already invested. They are already taking the country risk. So for them, it is now the time to perhaps consider add-on investments, not just for the next year, but the next 3 to 5 years, because this is a time to probably negotiate the best environment, the best incentive schemes for the follow-on cycle. And I've seen, for example, the other reflex, some of them trying to resize or downsize or leave the country overall. But, whether it's Turkey, whether it's, another geography, they are the ones always they got burned or eliminated because the markets are very dynamic, and emerging market policymakers and investors, they are very resilient to really turn the economy and the market conditions around. So I hope that they will not be left out. And lastly, I want to add that really the strategic investors, especially, they need to look at the next frontier investments, right? So, and I think that going back to what Sheikh Mohammed was saying, yes, there's free zones, but then there's free zones like the Qatar free zone. They are looking at food tech, agri-tech, like the next frontier investments. So they need to work with the government to make them smarter, because it's all about the public-private partnership going forward.
Thank you, Hakan. So we only have 1 minute left, but we said we're going to name names, so I want to name names. So 10 seconds per speaker. Tell me where you feel most optimistic, where you see the most opportunity, whether it's a country, region, or sector. So 10 seconds is don't need to justify justifications for the audience outside this room. So start with Sheikh Mohammed and we go anti-clockwise.
I think, answering your question, Ziad, South and Southeast Asia represents a huge opportunities. Countries such as India and Vietnam. Vietnam stands to benefit the most given its stable politics. I think regions such as Latin America, given cheap valuations and soaring commodity prices, even before the Russian and Ukrainian war. I think Africa as well, there's an opportunity for European companies to tap in for energy diversification. In terms of sectors, I think there's an opportunity in food security, energy, and supply chain diversification.
Thanks, Sheikh Mohammed. Martha. So turn the mic on.
Sorry. Yeah. I see opportunity in companies that have strong pricing power. So where we are, even in our portfolio today, we have exporting companies which have continued to actually grow their pricing. So despite the headwinds that we are facing, some of our flour exporters are enjoying good pricing this year. We also see tourism is picking up in developed markets. So we do expect to get some of that flow coming into Africa. And there also pricing has been quite strong. And then lastly, I'll also tag along and say on, the self-sufficiency trend. We saw that in the pandemic where a lot of countries were forced to invest in their health sector. So we do expect healthcare to continue to be a defensive sector in this economy. Thank you.
Thank you, Martha. So I'm going to get shouted at, so let's stick to 10 seconds. Ali. 10 seconds with the mic on, please.
Now, we'll go back to the same points. The export country like GCC, Qatar will continue growing and will grow fast because they have fiscals. We have everything. I think even the investors, which is, I can say it, it's an opportunity to come to the Middle East GCC, Qatar, Saudi Arabia, they're open. Regarding the imports country, which is they have issues now these days, the trades, and they need to look to another countries to find another solution for them. I think Brazil, Thailand, they are doing it now. I think there is an opportunity for all countries to get a new. The sector, I think, will continue. We will continue to say it. Oil and food will continue. When Venezuela and Iran will open, so this will change a lot of things. Sorry.
Thank you, Ali. Analicia.
So I agree with Ali. I think the Middle East will have great opportunity, and we have seen it already, and we experience it because the huge inflation in the America that has been transatlantic into Europe is going to bring us in Europe in a difficulty of taxation. And as the Middle East has higher oil price and more sales, then we have more liquidities, and therefore the suitable basis for attraction in the tourism side and development in the infrastructure, that will facilitate the Middle East to continue its trend of growth. And so long the Middle East does not conflict in this situation around the world, we are going to be having a great opportunity. And I do agree that Latin America have a great opportunity. Unfortunately, if we go left, with most of the government, it may turn us down. But there I see great opportunity both in South America, Southeast Asia, and Middle East.
Okay, so I have to conclude. I'm going to get shouted at. So I'm just telling you very quickly, which countries have balanced their books and opened up? Just 2 seconds.
Look, let me just say that the GCC.
I'm going to get killed.
let me say where.
Yeah.
The GCC has a huge inflow of capital happening to them right now. If they're able basically to deploy this in growth industry, which is related actually to renewable, and not only to produce the energy, but to produce actually what produce those. So upstream industry and downstream industry from that, they can turn themselves into a multi-energy matrix hub for the world. And that could be where the capital is, the stability, and they'll be able basically to diversify their economy. So they have a huge opportunity. I hope that they will make it happen. They still need to reform, continue the reform agenda, and accelerate it, actually taking advantage of this inflow.
Thank you, Assam. And thank you to all the panelists. So we ran out over time, but thank you for the audience for joining us. Thank you for the panelists for their insights, and enjoy the rest of the day.